Tax Accountants in Mississauga: How to Save Tax.
Hi, my name's Alan Madden. I'm a chartered accountant and a tax accountant in the Mississauga region of Ontario, Canada. How do I save taxes in Canada? That's the topic of today's short video. The first way that an employee can save taxes in Canada is by writing off employment expenses. Not all employment expenses are tax deductible, but some are. For example, car expenses that you incur for employment duties are tax deductible. Home office expenses for your workspace at home are tax deductible. The use of your cell phone, tools and supplies that you may have purchased for work, and salary paid to an assistant. You must complete Form T-2200 Declaration of Conditions of Employment and keep that on file. This form must be signed by your employer. This is a prerequisite for you to deduct employment expenses on your tax return. So if you're currently not deducting any employment expenses on your personal tax return, it's time to talk to your accountant to see which ones you're missing out on. The second way to save tax in Canada is by contributing to your RSP first before paying down your mortgage. Now I know that seems counterintuitive and risky, but it's really not. If you contribute to an RSP, the amount of the contribution is tax deductible. In addition, any income and gains earned inside an RSP are tax-free. So if you are looking to make additional payments, you'll be far better off from an after-tax cash perspective by contributing to your RSP than paying down your mortgage faster. Remember, by paying down your mortgage faster, you are saving interest, that's correct, but the interest on mortgages isn't tax deductible in the first place, nor do you get a refund for paying down your mortgage faster. To top it up, what I would advise is that any tax savings that you realized by contributing to your RSP, you could use that money to pay down your mortgage. There are many tax calculators available on the internet which will illustrate with actual numbers how much more better off you would be by contributing to your RSP instead of paying down your mortgage faster. And I myself have written about this. The third way to save taxes in Canada is by paying salaries to family members. If you are a business owner, this is very useful because salaries paid to family members are tax deductible as long as the salary is reasonable. And if your family member is in a low tax bracket, he or she will pay very little tax on the salary received. If your children, for example, don't have any income, they could receive up to $10,320 in salary without paying any tax at all, and that salary payment would still be deductible to your business. The fourth way to save tax in Canada is through the use of a family trust. A family trust is used to hold shares of your private company, real estate investments that you have, or portfolio investments such as stocks and bonds. Any income realized from these investments, shareholdings, stocks, real estate, etc., would be flowed through the family trust and attributed to the beneficiary's income. Usually, the beneficiaries of a family trust are children, spouse, family members. Because they are in a lower tax bracket than you will be income splitting and saving taxes overall. In addition, any future growth in the value of the investments will accrue to your family members through a family trust as opposed to you. This is very advantageous because when it comes to that ugly word death, the future value will not be taxed upon the time of your death, but that future value which accrued to your family members will be taxed upon the time of their death. It's a great way to defer taxes. If you found this information useful, I encourage you to visit my website for more tax tips, My website is shown at the bottom of the screen, http://maddenca.com. Secondly, I encourage you to access my free report called 20 Free Tax Secrets on How to Beat the Tax Man. The URL for this report is shown at the end of this video. So go ahead, visit my website, get the free report, and save yourself a ton in taxes. Thanks again for watching.